Good afternoon to everyone, and you're welcome to the discussion panel with Sam Hudson out of Cornbelt Market Incorporated, joining along with Chip N. Chip is in Morton from Blue Reef Finance. Thanks for coming out with us for our discussion panel about the commodity markets. Stu Ellis will be a monitor for this afternoon. Thanks, Stu, for coming over for this afternoon.
Thanks a lot, Caesar. We certainly honored to visit with you, with Sam, with Chip Nellinger, and Todd Gleason's on the line, I think, as well. We certainly should start out by saying our discussion today is preceding the USDA's release of its acreage estimate on June 30th. We have seen a continuation of the downtrend in the market, thanks to some timely rains here today on Thursday the 29th. And so weather is going to continue to have a long-term impact on the market. But right now, about 70% of the crop is in drought, according to USDA. The trade is looking for about 91.85 million acres of corn, 87.65 million acres of soybeans, which means that probably about 150,000 acres of corn got planted, or that got switched from corn to soybeans after the tough time that the northern corn belt had in warming up and drying out. But there's a lot of pluses and minuses in the market, and we want to talk about all that volatility with Sam and Chip. Gentlemen, let me just start off by just throwing out the question, where is this volatility going to end, and when might it end?
Well, maybe this week, we'll see. I mean, obviously we ran stuff up. It was kind of a vacuum up, vacuum down sort of situation. And, on the whole, as poor as our demand has been, we ran prices up, covered some shorts, obviously got some speculative buyers in there. And at this point, we're, like I said, vacuum back down. When you have no demand, there's no natural bid in the market. And most of the people that own it already own it and don't need to own anymore. And so you get right back down to earth at this point. And I still think, we've got a path here to potentially bounce things again. I still think yields have got to come down, but the challenge has always been at what pace, because we probably got to carve out about, 300 to 500 million in potentially in export demand at some point here over the next 3 to 4 months. So it's all going to happen at the same time. I think you're going to have a lot of ups and downs between now and probably that September crop report. And by then we're going to be, thinking about what we're going to be harvesting out here, but we're going to have gotten just enough rain to put in some debate about yield instead of thinking that we just got to get to a 160 or something like that.
We've certainly seen a lot of variability just among the three of us here this afternoon, Chip, that at least the variability in the rain. And so it's probably quite scattered across the Midwest, if anybody got some.
Yeah, this first dose of rain, there were some good 1 to 2 inch amounts in there, 2+ probably in some areas, but it was a little bit sporadic. The market has built in quite a bit of rain over the next couple of weeks here. This was the first dose that we got this afternoon. There's another one following here this weekend, and so I think the market's expectation is that there's 3+ inches of awful strong coverage across the driest areas of the drought right now. Over the next week and a half, and so that's part of the reason. You mentioned the volatility. Part of the reason we saw that was the forecast went from, we couldn't buy a rain for 6 weeks, and now every day the forecast has kind of been trending wetter and wetter, and the market really extracted a lot of weather premium quickly, and now the problem is going to be there's going to be this battle, or there already is on Twitter this afternoon, right? There's people that say, oh, we still have trendline yields available potentially out there if it's still keeps raining. And there's others that say, oh, we've taken the top end of this crop off no matter what. And so to Sam's point earlier, we're going to fight that battle going forward every month on each USDA crop report. And we might not know till the combines roll, and we might not even know it until the final January crop report. So that battle of how short is supply, how much do they have to bring demand down, likely is going to drive some additional volatility over the next at least couple of months.
We'll see USDA doing some numbers adjusting in the July WASDE report, but in that August crop report, we'll see what farmers think, because they'll be in the fields at that point. So some of them will kind of be some maybe try to push the market down a little bit, or push the market yield down a little bit, push the market up a little bit. So we'll have to see what they weigh in August. Sam had mentioned demand. We're going to have to cut back on demand. We've certainly cut back on the demand coming out of China. Chinese still buying some beans, but they're going elsewhere for corn at this point, gentlemen.
That's right. I mean, they really, they're still buying quite actively. I mean, I think their soybean imports for May were actually record large. They're just not buying them from us. They're still getting them from Brazil. They've taken a lot of corn, grain in general, I think, out of the Black Sea region. And so we're not the first choice in their mind at this point. If we ever get to a point where the economics, support that, I think they could come back into our marketplace pretty easily. But when you look at what we've dealt with over the last year with the drought in the West, and the fact that our domestic demand basically cannibalized our export program, we could be seeing the same thing here as we move into this harvest. But we need to see something. We finally saw a flash sale this week, but it's not enough to really make a splash. I think we need to really build that over a period of time, and unfortunately prices might have to go lower to do that still between now and the end of the year.
Chip, any follow-up to that?
Yeah, I agree with Sam. I think the problem is going to be corn demand going forward. I think if there's any story, it's, in my opinion, it's on the bean side. The balance sheet to me looks much tighter on beans. And if we do end up somewhere south of trendline yields on beans, you don't have to shave much out of yield, and it gets very, very tight here. To Sam's point, China, has been buying out of Brazil, but the drought in Argentina is going to change the dynamics of the world vegetable oil markets and soy meal market. And we've seen some pretty good demand on the soy meal side here recently. There's different, kind of tight pockets in different vegetable oil markets, like the palm oil market worldwide. And so, in my opinion, the USDA has more wiggle room on the corn. As they drop yields, they can also drop demand. That's harder to do, in my opinion, on the bean balance sheet. So, I think if there's any story going forward that could be really, really bullish, it could be beans. But we're, about in the third inning on the game here on beans. These rains will help, but we're going to need more rain in July and August to keep them moving along. And a lot of short beans, a lot of poor stands. These rains will help, but we're going to need more behind it. So demand is certainly something that's going to be, at the forefront of the traders' minds going forward in both corn and beans. And it's such a global market anymore that, it's not just about us; it's about the rest of the world too.
How did the trade really react to the EPA's estimates on bio-based biodiesel, biomass based fuels. Did they kind of say pshaw on that, or did the markets really take it to heart as far as demand for soybean oil in the next coming years?
Yeah, the initial reaction, we were limit down in soy oil the day after that announcement, and it followed through. So we had a big break in prices. Now you could argue that the soy oil market was maybe ahead of itself and had rallied too far too fast, but they seemed to kind of recover there. I think once the emotion got out of it, and the disappointment around that, I think in my take home, that biodiesel market is going to kind of stand on its own, and just because the EPA has those mandates doesn't mean it's still not really good demand, or that on its own we could exceed that. So I think there were some calmer heads that prevailed, but it took a couple days. It was a big shock that it wasn't bigger numbers, and it disappointed the market initially.
We as we're doing this, go ahead, Sam.
I was just going to say, I would agree with what Chip said. I mean, I think this, and it may be a good thing that they're not throwing a bunch of money at it. Maybe it'll offer more sustainable type of growth. I mean, we see it in the ethanol industry. Anytime the government gets behind it, they also own the throttle too. So hopefully long term, we can still see, optimism in that sector, but it's just, the USDA is not going to be, or the government's not going to be the one to throttle it up and down, at least for right now.
Well, I think we're right now at end of the month. We're end of the quarter, and so as the USDA releases its numbers for the acreage estimates here on Friday, just the day after we're visiting, probably quite a bit of adjustments in the market, and so we could see continued volatility. I'm assuming for quite some time. But do you gentlemen see either any other bearish or bullish forces that are going to be at play?
Chip, you want to go on that one, or you
Well,
want to go
first? I'm always frustrated at the acreage reports. I don't think the timing's right on those. Sam led me right into that. He knew where I was going to go with this. They're not really expecting much of a change. They're 150,000 acres, give or take, either side of what they came out with in March. It's not going to include any of the possible prevent plant acres from North Dakota, so we're going to have to wait till later in the year on that. There's also a stocks report out, and that might be maybe the most volatile part of this. I think that they're always wildly difficult to guess or predict ahead of time. So you have the potential for, surprises on these quarterly stocks. It's different from ending stocks. It's not what we're going to have at the end of the marketing year. It's what we had in old crop stocks as of the 1st of June that was still left in commercial or farmer-owned storage or transport in rail or barge at the time. And so very difficult, and that's where we could open the door up for some potential surprises. At the end of the day, I think then it's about, we'll trade that for a little while, and then it's about, the forecast and the weather models. And I think that unfortunately is something we're going to have to deal with at least through the month of July and probably the first half of August. Is where is it raining? What's the coverage? Where are the areas? How big are the areas that might be missing out? And I think weather overshadows the stocks and acreage report tomorrow.
Okay, Sam, any other bearish or bullish forces you think are going to be working on the markets here in the near future?
Part of the thing feeding into the volatility is open interest being so low. I mean, I think I was seeing somewhere recently, corn and soybean combined open interest was like lowest since like 2014 or something. And so until you get more people confident in what they think they need or they think they have, we're going to see potentially some wide swings here. I do think the stocks report this week could actually offer somewhat of a supportive tone to corn. I don't really believe we've got out there what USDA says we do, but when you got a potentially big crop coming, they can afford to kind of hide it in there. And so we'll see what they do. I do think yields are coming down in that July report, maybe only 5 bushel or something, and maybe we get to a 170 by August. But as Chip said, the weather over the next 3 or 4 weeks is going to dictate whether or not you can get people on board with thinking that yields can fall below there. Because if we just get to a 170, I still think we cut enough demand out of this thing that we don't have to go, racing back through the highs necessarily, and really could still potentially make new lows. And I think the toughest time probably comes next winter. If South America looks to, plan another big crop and have decent weather, and we're chewing on a big one of our own at high interest rates, you're going to have to sell more corn to meet input costs and, put another crop in. So I guess that's the thing I'm thinking about long term. Otherwise, it's just kind of buckle up and take opportunities and, when you can, not when you have to.
Gentlemen, some very astute observations. We really appreciate that. From Sam Hudson at Cornbelt Marketing over in Brimfield, and Chip Nellinger at Blue Reef Marketing at Morton. So we really appreciate your time here today, and appreciate your insight, and hope that some of the folks that get a chance to view or listen to this program will be better informed. And I'm Stu Ellis, turning it back to Caesar. Caesar, thanks for the opportunity today.
Thanks for coming out with us for our discussion panel about the commodity markets. You've been listening to Back Roads of Illinois. I am Caesar Delgado.
Thanks, Caesar.
Thank you, Caesar.
Thanks, guys. Thanks, everyone.
Yeah, thanks,
Thanks, guys.
You guys have a good 4th of July.
Sam,
too,
good
right?
to meet you, sir.
Hey, you too, guys. Chip.
See you,
Dave.
Sam. Don't
later.
eat too much.
Oh man, I don't.
Watch out for the Roman candles, man.
Oh, I don't. I can't eat anymore. See you,
Market's
Cesar.
got
Happy 4th
you.
of July,
Market
guys.
got your Malox. You got heartburn over the market.
Oh no, I'm good, man. I sleep like a baby at night. I sleep like
Me
a
too.
baby.
All right, guys. See
Take
ya.
care.
Thanks.